back to Chart Wizard Trading. This is part of a live stream within the Discord on wavecounts.com. So you'll hear more and more people chiming in the back. Well, this is an emergency and urgent update for the U.S. stock market, starting with the S&P 500 index. This is a line chart of the S&P 500 down from the October 2023 low. Okay. If we look bigger, all the way back to the October 2022 low, we have a nice and clear 5-wave structure up to new all-time highs. And what we are concerned with at this point, and what we've been watching ever since this high broke, this is my really last major video. We had one at this top, which turned out to be accurate as at least an intermediary top. We had one after this top, okay, and now here we are again. I don't release these videos about the S&P 500 lightly. I'm not issuing these every single day. I'm not calling tops every single day. I'm making these when it's of utmost importance to pay attention. Okay. This one was at the end of a 3-wave move, after which we had to decide, is this 1, 2, 3, or is this ABC? Okay, with the benefit of hindsight, after this move down and after the break of this high, you could see not ABC. Okay. This is the point of the Elliott Wave theory. It tells you when major turning points are going to occur. Then you observe the price action and decide and what's going to happen after and going forward. Go back in my timeline. Video here, major turning point. Video here, major turning point. Video here, very, very likely to be a major turning point. Very important to pay attention here. We have a 5-wave move up with an extended 5th wave. Okay. Most impulse waves contain one and only one extension. The rest either have no extension at all or 2. Most impulses have 1. That's what we have here, an extended 5th wave. So major turning point is upon us and we need to pay attention. Now we're going to focus from October 23 forward. 5 waves up to a 1, 2, and a flat pattern. Extended first wave, 1, 2, 3, 4, 5 for your third. Zigzag for your fourth, exhibiting alternation between 2, blue 2, and the blue 4. Alternation between the 2. And a 5th wave. Okay. There are no extensions in this 5th wave. Okay. If anything, you could probably call you can call it a 5th wave extension, maybe, but not really, because it's the shortest wave. All right. Let's look at just this 3rd wave. Where do corrections typically bottom? Okay, in the 4th wave of the prior degree, unless the 1st wave is extended, then it's the 2nd wave of the extension. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9. It's still the 4th wave, 4th biggest pivot back. It just so happens the 1st wave is extended. And that's where the 4th wave bottomed, near the terminus of the 2nd wave of the 1st wave extension within the 3. Okay. And that brings us to today, where I've been waiting patiently for 5 waves to complete to a high. Within the 5th wave, we have a flat 2, a zigzag 4, exhibiting alternation, and your final blow-off top. All contained by an impulsive channel, by connecting the blue 2 and the blue 4, dragging to the blue 3, and we're fully contained. This is very important stuff here, guys. It is all things that lend to probability. Another thing of note that's important, I'm going to go ahead and go back to candlesticks. I have it on line because sometimes in the daily you get all the gaps and it's easier to see it in line than it is with the gaps in the candlesticks. Okay. Notice this first wave is pretty long and the third wave is shorter. Let me make sure I'm in the right scale here. Okay, this is linear scale. We measure the first wave, swagging it, but I'm going to get pretty close. Okay, we can see the 100% extension of wave 1 is way up here at 53.72, and third wave did not get that far, which means that the 5th wave has to be shorter than the third wave. Okay, we can look at it percentage based. Arithmetically, I don't think I've ever seen it not match arithmetically, but we'll look at it percentage based. 15.8% for wave 1. Technically, how you measure the length of waves is in percentage. Okay. We got 12.4% for wave 3, and that means that the 5 has to be less. Okay. And we got 11% for the 5. Okay. Progressively shorter. That meets the rules. The 5th wave is shorter than the third wave. Got a slight overthrow here. And we're looking over the next few days to return to the channel. Return into the channel and back. Actually, this channel's not drawn appropriately here in the candles. Let me adjust it a bit because it's supposed to be there. Top of the third wave in candles. I had it on the line chart, that's why. Okay. So looking to return to the channel and come down. This is a major turning point in the market. That's why I'm making this video. That's why you need to pay attention. And if you agree with the opinion, you may want to adjust your personal allocations accordingly. So what other evidence do we have supporting this? I'm going to use the futures chart. Here's the S&P futures. I'm going to come down to the hourly time frame. I use the futures chart because it smooths out the price action without all the gaps in it. Okay. And we can reasonably come to a 5-wave advance from this low in May, fully contained by an impulsive channel connecting the blue 2 to the blue 4, dragged up to the blue 3. And we're fully contained within the channel and a third wave extension. And I'll say again that most impulse waves contain one and only one extension. Third wave is extended in this final 5th wave. Some things that will tell us an early indication that this is over is that this impulsive channel breaks. Break it, back test it, go. That tells you, that's an early indication to you that this is all complete. Another early indication is testing the bottom of this channel before you test the top of it. It's telling you that likely this is complete and over with. Picking up tea leaves here. This advance in the S&P 500 is not confirmed by the Dow Jones. Not confirmed. Here we have the Dow Jones. This is a daily time frame, jump time frames a little bit. But we have a legal and clean 5 waves up to a high for the Dow Jones. 1, flat, 2, 3, 4, 5. Okay. Now, I do understand that this 4 is nowhere near the size of this 2. And you also have to understand that there is absolutely no rule that says how big a wave has to be as compared to an alternate wave of the same degree. Okay? What is a better representation is a comparison between percentage terms. So wave 2 retraced a total of about 6.5%. This being a fourth wave retraced about 5.5% with alternation. You have a flat 2 and a zigzag 4. There is potential for a triangle here. Okay. This being A, B, C, D, E, and getting one more high. Okay. While that is a legal possibility, we have to take into account that that would not be alternation. We have a 3-wave flat, and if you have a triangle, a running triangle specifically, okay, now if this were a contracting triangle, a normal contracting triangle, then we can make the case for alternation. But since this would have to be a running triangle, you would erase alternation. Because what is alternation? Alternation is one of the alternate waves between 2 and 4 either makes or almost makes a new extreme in price, meaning the B wave, right, or the X wave, or whatever the middle wave is, makes a new extreme in price. That's what you got here, right? You got A, B. This is a corrective advance, making a new extreme in price before you get your C wave. If this ended up being a triangle, right, you have an A corrective advance, and a B making a new extreme. Therefore, you do not alternate. Now, is alternation a rule? No, but we're here to pick up the tea leaves. We're here to determine what probability is. Okay? And if the S&P 500 is showing a topped-out structure, and the Dow Jones already shows with a guideline supporting a topped-out structure back on May 17th, then we have to use probability to determine that this, although the size is different, is the entirety. But we also have to consider that although this as a zigzag 4 seems kind of small compared to this big flat 2, it's also the next biggest thing to occur. So you can view that from both when we're talking about that very small section in the book that says the right look, right? Do I like the fact that this 4 is smaller than this 2 by a significant margin? No. But it's also the next biggest thing to occur. Despite the size difference. And there is nothing that says at all that this would be an illegal interpretation. In fact, we have a lot of guidelines pointing to the fact that it is a correct interpretation. Since May 17th, we got a move down and a 3-wave advance. Not even close to making an all-time high yet. Unconfirmed. That's what I'm pointing to here. We have what is very likely a top in the S&P 500. Unconfirmed by the Dow Jones. Unconfirmed by the Russell 2000. Just 2,000 stocks. Completely unconfirmed. That high was in March. The Russell tops in March. The Dow Jones tops in May. And here we are in June with the S&P 500 top. But if 2,000 stocks unconfirming a high isn't enough for you, well, then check out the entire New York Stock Exchange composite. This is every stock within the entire New York Stock Exchange, the whole exchange. And we have a top the same time as the Dow Jones. Unconfirmed advance from the Russell, the Dow, and the entire New York Stock Exchange. We have to pay attention to that. We cannot ignore it. We can't hope and wish that the rest of the market's just going to catch up to what a handful of stocks has done in the S&P 500. And when I say a handful, I mean a handful. I had this count. I don't know if I've updated it, but I'll pull it up here live. The S&P 500 financials. This is an hourly chart. Let's go to a daily chart. Okay. Labels might be a bit off here. Fact remains, this is all of the financial stocks out of the S&P 500, topping at the same time as the Dow and the New York Stock Exchange in totality. A subset of the S&P 500, the entire financial sector of the S&P 500, not confirming the high. Which means that this advance is extremely narrow. Very narrow advance. Only a handful of stocks are pushing this advance. That is not a healthy advance, which is why I am warning all of you about this analysis. We don't manage our money on hopes and wishes. This is a risk-based business. And in my opinion, which is not financial advice, I am not a financial advisor. I am a market analyst. In my opinion, it is riskier to invest in this market than it isn't, by a large margin. We can see a clear invalidation on this chart, the S&P 500. Clear invalidation. We can take the 100% extension of 3, because we know that 5 has to be shorter. It's a rule. It cannot exceed 55.36. Can't do it, or it invalidates this entire count. It has not crossed that boundary. And we have a complete structure in 5 waves. And we've met the upper boundary of an impulsive parallel channel. It is not different in the NASDAQ composite. Okay. Extended third wave with an extended fifth wave within the extended third. Flat 4, zigzag 2. Extended fifth wave. So we have 2 extensions. Extended third and extended fifth. That's the most you can have. You cannot get 3 extensions. It is not legal. Cannot do it. This is the most extensions you can get in an impulse wave. 2 extensions, that's it. We had an overthrow of the channel, and we've now returned into the channel. It does not bode well for the bulls on a very narrow advance. And this is the entire NASDAQ composite. This isn't just the 100. This is the entire 3,000 stock NASDAQ composite, the entire NASDAQ. Now, 5 can be as long as it wants to on this one, right? We are not limited to, because 3 is already extended and clearly longer than the first wave. Okay. But from a bigger perspective, if I go to that was on the hourly. If I go to the daily, okay, it's not limited here either. So different structure between the S&P and the NASDAQ composite. Same result in the end. The fifth wave extension. Again, I will repeat. Most impulse waves have one and only one extension. You can have up to 2 or none. Cannot have 3. This is a 5-wave advance, has to be complete. It already has 2 extensions in it. This is very important stuff here. So we are at a very critical juncture in the market. Where a 5-wave, not only a 5-wave advance, here's the S&P 500 again on the daily. Okay, we go back to line chart to get rid of all these gaps. Not only a 5-wave advance here, but a 5-wave advance here. We go to the weekly. Let's make it even bigger. Okay. I'll go to log so it's a little cleaner and easier to see. Okay, we got a bunch of labels here, but you can still see the structure. Okay. These labels needed adjusted. Apologies. I'm missing labels. Where is my larger degree labels? I'm missing the ones that go here. Why am I missing those? I don't know. Let me see here. Little glitch in the system here. Daily. Are they on my monthly chart? Is that where they're at? No. They're gone by accident somehow. Let me fix those. Yeah, because here's my other degree. I'm missing them. It's supposed to be here. In primary degree. Same degree as this correction. 1, 2, 3, 4, 5, like that. There we go. From the 2009 low. 5 waves up to a very probable completed top. Okay, if you got 5 here in the 5th, and you have an extended 5 here in the 3rd, right? 1, 2, 1, 2, 3, 4, 3, 4, 5. 9 waves. But if we look even bigger, from way back in the, actually starts way back here in the, up to interpretation where it starts, okay? But in this interpretation, it starts here in 1949, okay? After a 4th wave, should go there, a 4th wave triangle, okay? There's all other interpretations that you wind up in the same spot, okay? You can count the entire 4th wave here, right? And this is a 5-wave diagonal. Okay, or you can count this as a zigzag. It's ambiguous. But whether you start it here in 1932 or you start it here in 1949, you're going to wind up in the same spot with a 5-wave advance, 1, 2, 3, all the way up to 2000. Zigzag in the 2, flat in the 4, and an extended 5th wave. Okay. Or a 5th wave that contains an extension, I should say. not necessarily extended as far as the yellow impulse goes. We got to pay attention to that. In this view, there's lots of things that could happen. This whole, since we don't have an extension yet, right, of things that are equaling the amplitude of these waves, okay, this could all just be a 1. Right, in the big scheme of things, that could all just be a first wave of a fifth wave extension. After which, you're still expecting a very significant decline. Okay, your guideline would be down here, basically at the bottom of the COVID crash. That would be your guideline, and then maybe slightly past it. We're talking a very large retracement, and that's in the most bullish scenario, where all of that's a 1. And that ends up being a 2, and then you rock it for a long time. Worst case bearish scenario is that this is not going to extend, right? In which case, this whole thing gets retraced to the fourth wave of prior degree, which is likely around here in 1994. And you will get some type of, who knows what it's going to be. I don't know if it's a flat or whatever. You have to count it out. You have to see and analyze as you go forward. But even if it was a flat, let's say you get an A wave, a B wave, a C wave, something like this, you can repeat this. Don't say it can't happen. It can. You could repeat this same pattern on a bigger scale. Regardless, something significant is going to happen very soon. Very soon. Something significant is going to happen. People, even in the most bullish scenario, okay, the most bullish scenario, say we just come down to the COVID crash lows, that's a 60% drop. This is not small potatoes, guys. This is not insignificant. And there is potential for larger. This is why I make these videos. This is why I have memberships to Chart Wizard Trading. So you can learn to do this on your own. And not just go out and trust some dude you found on Twitter because he has this magical trend line that you think is never going to break until it does. Okay? Until it does. This whole thing right here can be channeled like so. And you can say that that is a magical trend line, the lower bound of this channel that I just drew. You could say, that's a magical trend line that could never break ever again until it does. Okay? That's why I do this. That's going to end it for the public portion. I'll stay on in the Discord to answer questions. So you guys in the Discord, you stay on. Public portion will end. If you're interested in becoming a member of Chart Wizard Trading, go to wavecounts.com.